Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Zheshang Bank Co. Limited annual report. China Zheshang Bank Co. Limited offers a wide range of commercial banking services to its clients. The bank's corporate banking segment provides financial products such as corporate loans, trade financing services, and credit commitments to corporations, government agencies, and other institutions. In addition to corporate banking services, the retail banking segment caters to individual customers by offering personal loans, deposits, wealth management businesses, and card services. This segment also provides various retail banking services that cater to the needs of individuals. The Treasury Business segment is responsible for managing the bank's financial assets and liabilities. It offers a range of financial products and services including money market transactions, debt instruments investments, equity instrument investments, and financial derivatives business. The bank also issues debt securities as part of its treasury operations. Overall, China Zheshang Bank Co. Limited provides a comprehensive suite of banking services to both corporate and individual clients, making it a one-stop shop for all their financial needs. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the extracted summaries. On the growth side, several key factors contribute to increased revenue. Firstly, expanding services to upstream and downstream supply chain enterprises has led to significant increases in deposits and loans. Additionally, the expansion of foreign exchange trading services exceeding $45 billion has also contributed to revenue growth. Furthermore, the company's agency and entrustment service saw a 23.22% increase, while settlement and clearing service experienced an 18.88% rise. Custodian and fiduciary service also grew by 3.92%. The company's strengthened market research and judgment capabilities have enabled it to make more informed investment decisions, leading to increased revenue. Innovative product launches, such as the Zhejiang Regional Sci-Tech Innovation Bond Basket, have also contributed to growth. Breakthroughs in innovative businesses, including standard bond forwards and standardized interbank certificates of deposit, have further boosted revenue. Interest income from credit commitments, fees from fiduciary activities, and custody fees have also been significant contributors. On the decline side, commitment and guarantee service saw a decrease of RMB 115 million, minus 20.85%, while underwriting and consultation service experienced a drop of RMB 312 million, minus 33.62%. The retail banking segment revenue declined by 5%. These factors highlight the importance of diversifying services and products to mitigate potential declines in specific areas. Net income and profit margins. A changing landscape, the net income of a company underwent significant fluctuations between 2024 and 2025. Initially, it decreased by 14.85% to RMB 12.931 billion, indicating a decline in profitability. However, this trend was reversed as the net income increased from RMB 11,441 million in 2024 to RMB 12,911 million in 2025, marking a growth of 24.5%. This increase can be attributed to an improvement in net interest income and a decrease in operating expenses and expected credit losses. Profit margins also experienced changes during this period. The profit margins decreased due to various factors, such as a decline in average yield and enhanced liability quality management. Specifically, the operating income margin dropped from 67.7% in 2024 to 62.5% in 2025, while the net interest income margin decreased from 45.1% to 44.3%. Additionally, the profit before taxation margin declined from 17.6% to 16.2%. These changes can be linked to the volatile upward movement of bond market yields during the reporting period. The reasons behind these fluctuations are multifaceted. The increase in net interest income and decrease in operating expenses and expected credit losses contributed positively to the growth in net income. Conversely, the decline in average yield and enhanced liability quality management led to a decrease in profit margins. Overall, the changes in net income and profit margins reflect the dynamic nature of the company's financial performance during this period. The company's financial performance indicates a positive trend in its operating cash flow. On page 27, an analysis of net interest income and expenses reveals that the company is indeed generating positive operating cash flow. Furthermore, on page 196, the operating cash flow for 2025 is explicitly stated as RMB 43,119, which confirms this positive trend. Additionally, on page 257, a summary highlights that the net cash generated from operating activities in 2025 was RMB 9,265 million. This significant amount of net cash generation from operating activities reinforces the notion that the company is generating positive operating cash flow. Overall, these indicators suggest that the company's financial health is improving, with a steady increase in its ability to generate cash from its core operations. The company's debt level and interest expenses have undergone significant changes in the past year. On one hand, the total debt level has decreased by a substantial RMB 3,880 million, indicating a reduction in financial obligations. This decrease is also reflected in the Tier 2 capital, which dropped from RMB 59,865 million to RMB 50,904 million. However, there are some contradictory indicators. The total personal loans and advances increased by RMB 0.656 billion, while the interest expenses have shown mixed results. Initially, interest expenses decreased by a significant RMB 8.366 billion, 12.76%, in 2025 compared to 2024. However, later on, it is mentioned that interest expenses have increased from RMB 12,078 million to RMB 14,484 million. Despite these fluctuations, the overall trend suggests a reduction in debt level and interest expenses. The decrease in Tier 2 capital and total debt level indicates a more stable financial position for the company. However, further analysis is required to fully understand the implications of these changes on the company's financial health. The economic performance of various regions in China has shown significant variations over a certain period. On the positive side, the Yangtze River Delta region and Midwestern China region have demonstrated impressive growth. The Yangtze River Delta region recorded a notable plus 4.51% increase in proportion, indicating a strong economic momentum. Similarly, the Midwestern China region showed improvement in its non-performing loan ratio, reducing it from 0.95% to 0.89%. On the other hand, several regions have struggled with declining performance. The Bohai Rim region and Pearl River Delta, an economic zone on the western coast of the Taiwan Straits, have experienced significant decreases in proportion, standing at -17.57% and -14.86%, respectively. Furthermore, these two regions have also seen a worsening non-performing loan ratio, with the Bohai Rim region's ratio increasing from 1.22% to 1.09%. The Pearl River Delta, an economic zone on the western coast of the Taiwan Straits, although showing a decrease in its non-performing loan ratio, still lags behind the Yangtze River Delta region. Management is outlining a comprehensive strategy for the company's future growth and development. The primary goal is to build a first-class commercial bank with sound governance, adequate capital, standard management, controllable risks, outstanding core competitiveness, and significant brand influence. To achieve this, 4 strategic paths have been identified: refined management, quality service, technological innovation, and talent cultivation. The company will focus on harnessing trends and changes to seize development opportunities, particularly in key industries such as biomedicine and artificial intelligence. Management is also emphasizing the importance of 5 finances: technology finance, green finance, and policy guidance for promoting high-quality development of the real economy. In addition to these strategic initiatives, management is prioritizing risk management, adopting a prudent and solid risk appetite, and adhering to the political and people-oriented nature of financial work. The company will also focus on building a full life-cycle circular operation of bills and seizing market trends to increase bond investment holdings for regional economic development and real economy financing needs. Furthermore, management is committed to deepening the development in Zhejiang, enhancing competitiveness of key regions through intelligent risk control, precise credit risk identification, and forward-looking prevention and resolution. The company's outlook or strategy is heavily dependent on the macroeconomic environment and the group's internal credit risk management strategy. Overall, management's vision for the company's future growth and development is centered around building a first-class commercial bank with sound governance, adequate capital, standard management, controllable risks, outstanding core competitiveness, and significant brand influence. And the company's financial history reveals a consistent pattern of dividend payments. In various years, including 2025, 2024, and 2023, the company has distributed specific amounts to its shareholders. The declaration of a cash dividend in 2025 further solidifies this trend, with each 10 shares entitled to RM/0.31. Additionally, the recognition of dividends as a liability on the balance sheet underscores the company's commitment to fulfilling its obligations to shareholders. However, there is no conclusive evidence to suggest that the company has engaged in share buybacks. While an increase in shareholding was noted, it did not explicitly state that shares were repurchased by the company. In fact, multiple pages reviewed failed to provide any relevant information on share buyback activities. As a result, it can be concluded that the primary focus of the company's financial strategy has been dividend payments rather than share repurchases. That concludes the financial summary for China Zheshang Bank Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.